The revival from the recession induced by the COVID-19 pandemic and the response to the worldwide energy crisis have proffered a momentous upswing to investments in the clean energy sector. Upon comparing our projections for 2023 with the data from 2021, the yearly investments in clean energy have experienced a notably swifter surge than that in fossil fuels during this period, 24% versus 15%. Our novel analysis accentuates how the period of heightened instability in the fossil fuel markets, resulting from the invasion of Ukraine by the Russian Federation, hereafter referred to as Russia, has expedited the momentum behind the deployment of various clean energy technologies, even as it prompted a momentary scramble for oil and gas supplies. According to our estimations, an approximate sum of $2.8 trillion will be injected into the energy sector in 2023. Of this amount, more than $1.7 trillion will be directed towards clean energy, encompassing renewable power, nuclear energy, grids, storage, low-emission fuels, efficiency enhancements, and end-use renewables and electrification. The remaining sum, slightly surpassing $1 trillion will be allocated to unabated fossil fuel supply and power, with approximately 15% designated to coal and the rest to oil and gas. The ratio of spending on clean energy to fossil fuels is now at 1.71, indicating a significant shift from the 1-to-1 ratio observed 5 years ago. Various factors have contributed to the surge in clean energy investments. These include improved economic conditions amidst high and fluctuating fossil fuel prices, enhanced policy support through measures like the U.S. Inflation Reduction Act and new initiatives in Europe, Japan, the People's Republic of China, hereafter, China, and other regions, a strong alignment of climate and energy security objectives, especially in import-dependent economies, and a focused approach towards industrial strategies as countries endeavor to bolster their position in the burgeoning clean energy market. Renewable power and electric vehicles, EVs, have spearheaded this momentum, with notable contributions from other sectors such as batteries, heat pumps, and nuclear power. In 2023, low-emissions power is expected to encompass nearly 90% of the total investment in electricity generation. Particularly, solar energy stands out as the star performer, with projections indicating over $1 billion being invested in solar energy daily throughout 2023, amounting to $380 billion for the entire year, surpassing upstream oil investments for the first time in history. Consumers are increasingly investing in electrified end uses. The demand for electric cars is witnessing a tremendous surge, with sales projected to surge by more than one-third this year, following a record-breaking year in 2022. Consequently, investment in EVs, defined as the incremental spending on EVs compared to the average price of vehicles sold in a given country, has more than doubled since 2021, reaching $130 billion in 2023. Global sales of heat pumps have witnessed double-digit growth since 2021. The momentum driving clean energy investments is rooted in a potent confluence of costs, climate goals, energy security targets, and industrial strategies. The year 2022 proved to be exceptionally profitable for many fossil fuel companies, as they witnessed soaring revenues due to higher fuel prices. Net income from fossil fuel sales more than doubled compared to the average of previous years, with global oil and gas producers raking in around $4 trillion. Our comprehensive analysis of the spending plans announced by large and medium-sized oil, gas, and coal companies suggests that investment in unabated fossil fuel supply is slated to increase by over 6% in 2023, amounting to $950 billion. The lion's share of this sum is allocated to upstream oil and gas, where investments are expected to grow by 7% in 2023, surpassing $500 billion and returning to levels akin to those observed in 2019. Approximately half of this increase is likely to be absorbed by cost inflation. Despite announcing higher spending plans owing to record revenues, many large oil and gas companies remain cautious about longer-term demand, concerned about costs, and facing pressure from investors and stakeholders to prioritize returns over production growth. As a result, only large Middle Eastern national oil companies are substantially increasing spending in 2023 compared to 2022, and they represent the sole subset of the industry surpassing pre-pandemic levels of expenditure. The headline rise in spending on new oil and gas supply constitutes less than half of the cash flow available to the oil and gas industry. In the period between 2010 and 2019, around 3/4 of cash outflows were typically invested in new supply. Presently, this proportion has dwindled to less than half, with the majority of funds being allocated to dividends, share buybacks, and debt repayment. Investments by the oil and gas industry in low-emission energy sources amount to less than 5% of its total upstream investment. However, this percentage varies widely across companies, with double-digit shares common among large European companies. While investments in clean fuels, such as bioenergy, hydrogen, and carbon capture, utilization, and storage, CCUS, are increasing in response to supportive policies, they still fall short of what is needed to align with climate-driven scenarios. Investments in coal supply are expected to increase by 10% in 2023, surpassing pre-pandemic levels. Nevertheless, investments in new coal-fired power plants continue to decline, though a cautionary sign emerged in 2022 when 40 gigawatts of new coal plants received approval, marking the highest figure since 2016. A majority of these approvals were granted in China, reflecting the high political priority attributed to energy security following severe strains on the electricity market in 2021 and 2022, even as China scales up the deployment of various low-emission technologies. The increase in fossil fuel investment projected for 2023 is distributed unevenly across the globe, with less than half of the cash flow available to the oil and gas industry being reinvested into new supply. For more inspiring insights and updates on the renewable energy quest, don't forget to like, subscribe, and share this video to ignite the renewable energy movement worldwide.